All right, Nick. Well, I'm excited to dive in with you. Love what you worked on. Blockchain.com, amazing business. Maybe we'll just kick it off with, I'd love to hear how you view the difference between what blockchain.com was in 2014, 15 time period and what the company is today. Were there any major changes in the direction of the business or things that, as you reflect on the journey, have changed significantly?
Yeah, thanks, Mike. I really appreciate the opportunity to speak with you and your audience today. I think companies, so we're a 10-year-old company now, which for those that have followed startups is sort of a real monumental achievement for the team. And just like people take some time to mature, companies do too, and they go through different stages where they learn a lot, they expand their empires, then they consolidate, and they can expand again. Those are some of the things that I've seen and witnessed in my own experience at Blockchain.com. We founded the firm in 2011 in a little town in northern England, which is not known as a center of financial innovation. We started the firm in the original York, which I always kind of like because, of course, in this century, New York sort of became the place that people went to pursue the American dream and build their fortunes. And we went back to the roots in some ways. The thing that co-founders of Blockchain.com all had in common at the beginning was sort of a mutual interest in statistics. We learned about cryptocurrency and we started looking at the Bitcoin blockchain to find out whether or not there was any actual economic activity happening. And when we started doing some research, we built charts, we built some tools to actually look at what was happening on chain, meaning the public record keeping system for Bitcoin. We started seeing that there was real economic activity, and we kept building more and more ways of looking at that. It became pretty obvious to us, though, that if Bitcoin at the time was going to become more successful, it had to get easier to use. And cryptocurrencies were not an obvious thing, in my opinion, a decade ago. Just a small community of online computer scientists and engineers were sort of concentrating on solving relatively difficult problems, which is how do you build a trustworthy transactional system? If you were to build a new form of money, what type of principles should that foundational money have? How much of it should there be? How does it come into circulation? And what can you do with that money? What features does the money have? And I think it's kind of an interesting conversation because, ultimately many of us spend our whole lives in pursuit of money so that we can raise a family, invest in our futures, have great experiences, save for a rainy day. And then, we end up chasing all these crazy bills, right? These are euros in my pocket here. I might have some dollars. So why does that money have value and where does that come from? And if you start to go down that rabbit hole, you end up in some really interesting places. Some of them are philosophical, some of them are technical. And then I think the question sort of comes as like, well, humans have tried all different forms of money. Money is broadly understood to be a collection of systems that allows us as humans to exchange wealth. We used to use gold coins, we use pearls, we've used seashells, some societies use feathers, and we find artifacts of people trading things, in ancient tombs and more. And so if we think about, how money can evolve to be more effective for people in the future, cryptocurrencies, I think, are a really interesting thought experiment. And we're a decade into these thought experiments now, and we've seen a proliferation of innovation and ideas. And at Blockchain.com, it's been a real privilege to help inspire more innovation in that space and also build tools that millions of people around the world find useful to do basic things like send, receive, secure, trade, and exchange their money. And so what you need to know about Blockchain.com is that we're a decade-old company. We specialize in building wallets. Wallets are tools that help people manage their wealth. Just like you've got one in your pocket or maybe a purse, you can think of it as a way of storing precious information, whether that's an ID or different forms of currency, and then you can transact with those things online. We've had 80 million people sign up for wallets over the past decade in over 200 countries. Our firm itself has raised a lot of money to help pursue this growth, and now we're one of the wealthiest privately held companies in the world, which is exciting for us. We still see a lot of work down the pipeline, though. Even though we've achieved a good deal and the whole market's grown a lot, by some estimates, there may be 150 million people in the world that own some cryptocurrency today. Our goal is to get to 1 billion people by 2030. And so we're in the I would say, momentum and capacity building effort at the firm to add muscle to basically 10x from where we are today.
Gotcha. Thanks for the background. I like that. I like the description of money as well, and the alternative methods that we've used to keep track of energy effectively over time. How has the product itself? So early on, there were far fewer companies in the space than there are today. How do you think about, as a founder, the journey with regard to the competitive landscape? Not to highlight other companies, but there are a few major parts of the crypto ecosystem that companies have solved, like the onboarding from existing fiat banks into crypto, the storing of wealth, the exchanges themselves, and then all the other sort of DeFi and NFT aspects that keep flowering on as crypto grows. How do you think about, like, where initially you need a wallet to hold money, right? That's 2011, 2012, 2013. You're growing. The space is heating up as more people realize what's happening, with ups and downs. But how did you think about back then and even today how you enter the market? You know, you have a lot of assets, you have a lot of momentum, but you have to make difficult decisions on where to deploy engineering resources and marketing money. I'm curious what your philosophy is on product building and company building.
Yeah, this is a great question, Mike. So the very first thing we ever built was basically something called a block explorer. This was a search engine for looking at the time at the original blockchain, which was the Bitcoin network. And so we basically built an interface that has now been used by all other block explorers and basically created the taxonomy for looking at an online transactional history. So the ledger that keeps track of all of the transactions that have ever happened online, we built the first way of studying that. It's called blockchain.info. And that sort of created the argument on our behalf that, hey, there actually is stuff going on here. So the next thing we wanted to do was make it easier for people to interact with the Bitcoin network. And for us, it became obvious that we needed to build a wallet. We took a very early design decision to build a non-custodial wallet. Now, this is really important to understand. Most financial service providers are custodians. Your bank is a custodian. Your credit card processor is a custodian. Your savings or investment account is a custodian, meaning you send them money, they hold that money, and then they earn income off that money by trading it, by lending it, by providing you services. And then they either charge you fees or you get a split of the interest that they're earning by all their other business activities. So it's important to get to first principles about why cryptocurrencies came to exist in the first place. It was really designed as sort of a reaction to the 2008 financial crisis. And so the person that created the Bitcoin protocol wanted to create a peer-to-peer version of online electronic cash, digital money for the internet. And they didn't want people that would use this network to have to be concerned about counterparties, custodians, or intermediaries. I should be able to hand you a digital version of a dollar over the internet, and you should be able to go use that dollar as soon as that transaction settles and clears. So the Bitcoin protocol is both an economic fabric, and it's also a settlement system. So it's a type of currency, and it's a transactional network. And transactional networks always have three things on them. They have currency, they have settlement, and that settlement comes with a high degree of certainty. That way I can't send you some money, Mike, and then clock back and send it to somebody else. And so the Bitcoin protocol was basically extremely innovative in setting up this experiment. And we got to work building a non-custodial wallet so that our users would be firmly in control of their own funding. Our original motto was that you should be your own bank. So basically, your wallet is a place where you store digital forms of wealth, and you alone are responsible for that. And in that way, my company does not have access to what you hold in your wallet. We are not a counterparty. We don't centralize risk. And because of that, because it was true to the early principles of the Bitcoin blockchain, aka something that encouraged decentralization and individual responsibility for ownership over their money, we were very popular, and we found product market fit and a very important vintage of adopters. The early Bitcoin and cryptocurrency adopters are now extraordinarily wealthy. And so they've been with us through this whole journey. And ultimately, how we've approached improving the platform and basically what I would broadly describe now as the blockchain.com experience is to match people's needs for a product with new features as they come up and as the market evolves. And so I would say our unfair advantage was certainly being very early to the space with a product that people would recommend to their friends and family. I think a product for us that was so important was being non-custodial from the very beginning. There are contemporaries of ours, competitors, that behave a lot basically like a traditional bank. They are building tools that are centralized on top of a system whose whole purpose was decentralization. So to me, that's sort of antithetical to the whole design principle of the blockchain itself and of a variety of the new DeFi protocols. But there's still a good business model for those companies. And it's not to say that consumers don't sometimes prefer to have a custodian or an account relationship with a service provider. My view is that honestly, you should have a spectrum of services, and sometimes you want to be non-custodial, and sometimes you do want to have a custodial offering because there are trade-offs. The custodial offering can be significantly faster in executing things like trades. So from the blockchain.com perspective, we start off with the block explorer, we build the wallet, and then we start going multi-asset. Bitcoin was the first digital currency. There are now thousands of them. We have a very elaborate criteria for adding new digital assets to the blockchain.com experience. There's an ongoing fresh debate about that kind of thing in our world where some people say you just add everything. We're a little more judicious about that because we really want to make sure that the assets people have access to within the blockchain.com experience are high quality, meaning there's real communities building and developing these products and assets, that there's liquidity in the market, there's multiple venues where they can trade these things. They've got thoughtful roadmaps. They've been through a healthy legal and regulatory diligence. So we have a collection of assets available within blockchain.com where people can buy and sell an on-ramp with us as well. And basically, we try and match the user journey and what I would describe into the future of finance by making it possible for anyone in the world to get started with a non-custodial wallet, and then they can kind of ratchet up, the features that they have access to, depending on their jurisdiction and also what they want to do. So we offer a breadth of offerings at blockchain.com, and the best way to really think about it is like, and I'll summarize it quickly. In many ways, we're just a digital version of a future of financial house. Basically, we have a retail offering, which means that if you're crypto curious and you want to get into the space, highly encourage you to download a free blockchain.com wallet from the App Store. You can sign up. You can buy your first crypto in 90 seconds. You can experience trading. You can go into our exchange, which is a professional trading venue, and that's a little more serious. And then we have an entire institutional offering, which is far more sophisticated, where we work with high net worth individuals, family offices. We run bespoke financial services. We work with existing financial institutions to package up digital assets in a regulated way for them to have access to those as well. So the whole experience is quite a bit now, but I guess you say, like, you kind of grow your tree trunk as tall as your root system can support. So it takes time.
Yeah. What are the how would you estimate? You may not know exactly, but how would you estimate the breakdown in custodial management techniques? Now, I'm picturing people have a thumb drive that they're putting in a safe. They're getting a tattoo on their arm of their key. Like what are the most common ways that you've seen people intelligently manage personal keys? Because it takes on a lot of responsibility. Like you say, hey, you want to be a bank? I'm like, I don't know if I want to be a bank. It sounds like on some level, right? It's a lot.
It's a great question, Mike. So basically, it's best to think of it like a spectrum. There's a spectrum of storage solutions for maintaining access to what are called your private keys. Your private keys are basically like what unlock your vault or your wallet to be able to interact with a public ledger like the Bitcoin network or the Ethereum protocol. Now, you can sign up for an account, and then that account will hold your private keys for you. There's some risk in doing that, though, because that means you have to trust that counterparty to maintain very high degrees of security over that collection of keys. If that entity gets compromised, if there's a bad actor, if there's someone who's malicious internally or a disgruntled employee, they can run away with the entire lot. And so we've seen that dozens and dozens of times over the past decade. Famously, the Mt. Gox exchange was hacked in early 2014 and lost a huge amount of money. But there are many of these that have occurred over the years. So in short, I think everyone that's into crypto should at least learn how to self-custody so that in the event that they need to be able to manage their own wealth personally, they know how to do it. But there are also plenty of service providers that offer a blended security model. So if you think sort of mentally mapping these things, a unhosted wallet would look a little bit like a vault you would have in your house. A hosted wallet might look a little bit like your relationship with PayPal. A custodial account for a brokerage would look a little bit like E-Trade. And then you have more sophisticated stuff where you can actually have all kinds of signing tools as second factor services. So if I want to move money from one venue, I have to have not only my password, but even a USB key or a one-time use revolving code. And then there's even more hardcore stuff where you can actually send your money offline and store it in what's called cold storage. And so the only people that should really be doing that are ones that are extraordinarily, I would say, good at managing access to the documents they need to do so. And also, frankly, probably have enough wealth to warrant removing it from any type of digital system where there could be intrusion. And so, in short, there are a lot of ways to be safe. Most importantly is to work with service providers, companies, or vendors that have been in the space for a long time with long track records of safety.
What's your best guess, if you had to put a number on it, the percentage of, say, just Bitcoin in cold storage today?
Oh, I don't know if I could answer that. You can see how much is on venue at different trading exchanges. A lot of coins don't move very frequently, and it's almost impossible to know whether they're in hot or cold storage. You can see concentrations at large trading venues, so it's pretty clear how much is held within Coinbase and Binance and Kraken or Blockchain.com's exchange accounts. Those numbers are public. But how much is held across a variety of distributed addresses, that's a little more difficult to clump together. There are some blockchain analysis firms that have done some studies of this. There's definitely a concentration of wealth in early adopters. A lot of coins have also been lost, though. People lose their hard drive, they lose their the little USB stick that holds their wealth. And so when we talk about the importance of understanding how to use these systems and the responsibility that comes with self-custodying, it is important you follow the onboarding and you read the instructions carefully. And in the same way that if you lose the key to your home vault, it'll be very hard to get into that thing. And so it's important to keep track of your key.
Yeah, rest in peace for all those Bitcoins out there that never going to see the light of day again.
Many painful lessons.
Oh, God, myself included. Have you ever had one of those experiences where you send it to the wrong address or lose like a significant amount on some dumb mistake late at night?
It says they haven't had a little hiccup that's been in crypto for a decade. I don't think is being deeply sincere about that. I have had multiple accounts compromised, especially in the early days. The vendors were young and unreliable and not battle tested. And so, while we were, figuring out what was going on and mapping the market, you inevitably, there's some collateral damage that happens in any early market.
Yeah. And would you agree that it makes sense to say that we're at a point now, 10 plus years after Bitcoin has been around and early companies have been around, where there's enough technical concern, technical skill, regulatory concern to where you put your money in, you pick at one of the top 20 wallets out there, and realistically you're looking at like a 99% chance that it'll be fine. I mean, even a bank could lose your money, right? Like banks do and have, but do you feel like as time goes on, we're becoming these organizations are becoming more secure, or is there some black swan event that we could potentially be overlooking?
There's always the unknown. And so you spend a lot of time being worried about that. I can't speak on behalf of the security practices of the top 20, whatever. Anybody that's new to this is, I would say, probably hasn't experienced enough of a significant battle testing of their product to warrant putting large amounts of your trust in. When I talk about the enduring trust that service providers that have been operating the space for a long time, they take care of their customers, they get recommended by other users, they've been doing this for a long time. They have learned a lot in order to achieve those results. So in short, it's just important for people to do their research.
Yeah, I think that's a safe answer. What products at Blockchain.com have not worked? Have there been ideas where you guys were sitting around the table thinking like, hey, we got to make a Blockchain.com ICO token or spin up some NFT, or where you got past R&D, you're building something, or maybe even launched it and then realized, hey, this was not a good idea, and then ended up scrapping it? Anything come to mind?
Yeah, I'm trying to think. So in the early days of Blockchain.com, there was this sort of constant discussion in the crypto space, which was like, there's a chicken and egg problem. There's not enough places to go spend your crypto in the real world. So, we need more merchants to adopt places, basically build point of sale systems for, bars and restaurants and coffee shops and real places in the world to go transact in. And so we had built a tool that allowed basically merchants to catch Bitcoin, and it was just a QR code would appear on an iPad or on an Android, and you could basically immediately set up a wallet to accept payments in crypto. The reality was that the way merchant processor sales work is you literally have like a giant sales force that runs around and is like, hey, you should install this new cash register or new till or new system to accept payments. And the reality was that no one, there weren't a lot of people that were super receptive in the early days to have a cash register, a credit card processing machine, and an iPhone, and having to train their staff to figure out how to use these different systems, and then also want to accept crypto. And so, in short, I don't think the market was ready for that back in 2014, even though we really wanted it to be a reality, and we wanted to be able to spend our crypto. And so we were able to form like a small collection of small retailers, at least around the office, where we could spend some of our crypto. And amazingly, just speaking for a very specific example, the coffee shop that was below our office, we taught that guy how to use crypto. All of our teammates would go down and buy coffee and pay in Bitcoin. And he earned so much Bitcoin and held on to it because he understood the value of owning this alternative asset class. He was able to open a second coffee shop 4 or 5 years later. Because
I thought you were going to say, I thought you were going to say he was going to be able to buy Starbucks if he held on that long.
Not quite, but it's still but that to me is that's an amazing story. Like someone who earned so much extra on the side and held on to it because they understood why Bitcoin was an inflation hedge and everything else, digital gold, and was able to take that money and convert it into more wealth, creating opportunities for themselves and hire more people. And so, if more people had done that in early days, there'd be more stories like that. But, right now we're in an amazing time. Like the conversation from 2014 to now is completely different. I mean, you've got every major point of sale system and merchant processor in the world is going to implement crypto in the next 48 months.
Yeah, that's a big statement. Funny aside on this, we started this podcast in 2013, and in 2014, we started talking a lot about Bitcoin. And I had no idea what I was talking about, but I had a co-host who was really smart, Brian Rommel, and he was mining, and he had all these rigs, and he would always be like, "Oh yeah, how do you not know about Bitcoin already?" And so we'd spend hours and hours and hours talking about it. And then we had a donation button on the site where on our Quora page and Twitter page, it was like, donate to the show. It'd be fantastic if you do. So we got a couple of donations here and there, and somebody donated $90. And it went into our Coinbase account. And I didn't check it for 9 years. I checked it in 2021, and it was like not. It was like pretty much 9,000, close to $10,000, which was, I was like, wow, that's always a good feeling. That's the opposite of sending your money to the wrong place and losing it. Is you end up.
Yeah.
I'm sure this has happened, right? You're in it long enough. You have some money in some wallet somewhere that you forget about, and then you check it 8 years later. But
doesn't happen often enough. But yeah, it's the
I know.
equivalent of finding coins in the couch or something.
Yeah.
Yeah, those are
yeah,
cool
exactly.
stories. There are so many, and the other thing is like, I made a donation to my alma mater, my university. It was the first person, and they were the first university to accept a cryptocurrency donation in North America. And at the time, it was just like, it was an amazing learning experience, because I had to convince them that, one, it was okay to do so, that it wouldn't be technically difficult for them, and even if they decided they didn't want to keep the crypto, they could sell it and trade it out and hold dollars. I encouraged them not to do that, but that's how they wanted to treat it. So I made the payment, BitPay caught the payment, they sold the crypto, and they sent them the dollars. Now, if the university had decided to keep that trade in Bitcoin, they would have had a significantly larger amount of but it would be worth a lot more today, basically. But that's okay. The journey for people to learn about these things comes in a variety of formats. And to me, I made that donation from a small apartment in Berlin, like 2:00 in the morning, and it settled and cleared instantly in Seattle just a few minutes later. And so to me, like, taking people on the journey of how money can basically teleport around the world as easily as we can send precious information over the internet, the more people you basically orange pill, which is a euphemism for, basically teaching them how to use digital forms of money. Once they experience it, it starts to click a little bit more. It's like the first time you ride an Uber, you're like, oh, wait, I don't have to wait on the side of the road and then pray that a taxi drives by or something like that. Like, oh, this is a better offering. In the same way that if you've ever been annoyed that your bank account charges fees, or it takes 5 days to make a payment, or 48 hours to get a response to something, like, if you experience a far better service that does things you need, you get inspired, and you're like, oh, okay, I get it now.
Yeah. Where does that come from, that orange pill? Is that like a combination of the red and blue pill?
Yeah, it's like, crypto and internet money has like a lot of nerds in it, obviously. And I think the influence of the Matrix can't be understated, and like generally the tech space. But the idea was that, you take the orange color was the branding for Bitcoin, was an orange logo.
Oh, yeah.
And so if you take an orange pill and you go down the rabbit hole, and you realize that, oh man, well, if money, can actually be separated from the Federal Reserve banking system, and there's a new way of doing it, what are the implications of all that? And it just sort of opens up this like whole, interesting thought experiment about what the future of money can look like. And it's more relevant today than at any point in, the economic history of the United States and the world, because there are three concurrent macro factors that we really should talk a little bit about, Mike, that are happening. And if any one of them was occurring, I would be pretty bullish about the opportunity for crypto, but they're happening simultaneously. So it's worth kind of highlighting these things. Number one, 1 billion people in the world today are living under macroeconomic conditions where there's significant inflation, and there has been a huge amount of money created, partially in response to the pandemic and the closures of the economies, but it's unprecedented what's happening. We are experiencing record levels of wealth destruction via inflation, meaning prices are rapidly increasing everything from oil to commodities to education to healthcare, to things that we need to use every single day in our lives. Wages are commensurately not keeping up with that. And holding money in your savings account today at a traditional financial services provider, you are losing purchasing power on a day-to-day basis. And people are waking up to this, and it's a really big deal. The second is, since 2017, there was a sort of increase quickly in the price of crypto, and then a major collapse for a year and a half. That was a big correction. Everyone thought that traditional asset allocators, big pension funds, large Wall Street firms would start to dabble their feet in crypto. That was turned out not to be true in 2017 and 2018 and 2019. Last year, it's definitely true. And you see the likes of Louis Bacon, More Strategic Capital, Bailey Gifford, Morgan Stanley, Goldman Sachs, BlackRock. Everybody is building a crypto strategy heading into 2022. And so the largest allocators of wealth in the world have not yet started to take bites out of this pie, and they are all gearing up to do so. And so that's a big, huge change. And they're doing so for two reasons. One, they understand that digital assets are themselves an asset class that they can diversify into, and they should. And also, they're operating in that same backdrop of inflationary concerns and figuring out where they can earn yield on their money. They have pension obligations to pay out. People are expecting to be able to gain some predictable wealth, and they have nowhere to turn to. The bond market's hosed, fixed income's not going to happen for them. And so crypto is becoming more attractive for that reason. The third very powerful force that shouldn't be discounted is that the cultural zeitgeist, the artists, the musicians, the writers, the celebrities that poke fun of the institutions in the world and really push our understanding of art forward to create all the entertainment we consume. All of them want to have more agency and control over their content and their creativity, and they have discovered cryptocurrency in the past year. And so whether it's NFTs, non-fungible tokens, or new streaming platforms that are forming on decentralized networks, there is a huge amount of momentum from that space. And so, I'm excited about that because they are trendsetters and they are going to carry the culture of, in the flag for this movement forward. And so, it's a crazy collection of things happening, one that's impacting everybody. Two, the largest allocators and investment houses in the world understand the argument now and the hedge and will broadly allocate, in a diversified way anyway. And then, the trendsetters that that inspire the next generations, the next entrepreneurs are all in on this. And so those three factors combined are like the rocket boosters, in my opinion, that are all placed on this entire market simultaneously. And so, while there will certainly be, volatility in the market going forward, that's been a feature of our market in the last decade. That'll continue, but I am very excited about these three trends and how they'll interact with each other.
Have you heard the attitudes of the investment managers on behalf of the institutional funds, the really large bank accounts that are coming into the space? Do they think about this as we want to, I can't imagine them spraying and praying where they invest in, 150 different projects, but I also can't imagine that they're going to be incredibly consolidated around Bitcoin, Ethereum, the top 5 or so. Do you hear any sort of consistent patterns to their investment thesis? Or how do they even, because I'm sure they come into this blind, right? They don't know. And I'm sure they're just listening to podcasts, trying to, pick up where everyone is. They're effectively 10 years late to the party. Although I say that with the caveat that I'm sure there's incredibly savvy people who are at these funds or have been hired to these funds. But yeah, what's your take?
Yeah, it's a great question, Mike. So a couple things are happening. One is very smart people that have worked in traditional financial services have crossed over and are working at crypto companies, which means they bring institutional vocabulary with them that allows them to learn and then translate that vocabulary back to these institutions. And so they can speak a familiar language, they can understand I would call it like the economic argument or the philosophical argument for why allocating into a new asset class makes sense. And so the different people need to hear a different story. And what's interesting about crypto is some folks are in it for a digital gold argument or a hedge against inflation, or they want to capture some of a Web3 opportunity, or maybe they see the value of the metaverse and they want to buy into some of the transactional bandwidth of that future world. There are a lot of different things that convince traditional asset allocators that this is a good thing. But really, the street, aka New York, is broadly just starting to see this as another widget they can trade. And they go down the journey by starting with Bitcoin, because that's sort of the most important thing to wrap your head around, which is this is a scarce digital asset. It's the oldest one. This is how it works. There's 21 million units. The units come into circulation at a fixed and predictable schedule. It's extraordinarily liquid. You can get out of the position pretty much any time, and there's sophisticated markets to hedge your risk in there. And that is like enough. People go, okay, I get that. Then you talk about Ethereum and you describe, a worldwide computer that can basically execute contracts, and you can build all kinds of other feature sets on. That gets pretty exciting if people think about that. The further you go on down, I would say, the rabbit hole, you end up, talking about decentralized finance and owning a bit of what that could look like. And then ultimately, you can also invest in companies. And so, just today, Bain Capital announced a large strategic crypto fund. Sequoia has a giant crypto fund. Lightspeed has a giant crypto fund. Paradigm has a giant crypto fund. And these are all investing sometimes in companies that are building the picks and axes. Sometimes they're investing in the protocols that are building the instruction sets for how to create agreements over the internet. So there are a lot of ways to get exposure to crypto, and it depends. But I think most people have to kind of, just like when you go into school, you've got like course 101, course 102, and course 300. You have to scaffold the argument, basically. In my view, it still takes like a bit of a learning journey, but these guys are coming up that learning curve very quickly. And if you look at just the performance of the market over the previous decade, everything that was like molecular isn't doing so well. Like infrastructure projects, buying trains, building toll roads, some of it's doing okay. Tech equities, with the exception of the past 6 weeks, which have been brutal, have done extraordinarily well. NASDAQ has vastly outpaced the S&P 500. That speeding up seems to be an obvious trend. And by 2030, it looks to me and a lot of other analysts that the internet will be the largest contributor to GDP globally, its own economy. And so if the internet is this great coordinator of human time and talent, it needs a way to coordinate capital very efficiently. And crypto is specifically and uniquely designed to be a transactional and financial network for the internet. And so if you see these trends, it's just sort of like, okay, of course I want to own a portfolio of different things to manage risk in the market. But I also want to own some stuff that is innovative and building onto future trends. And so in that way, I would say the large asset allocators and institutions definitely get what's happening, and they're designing their strategies to, hold a little Bitcoin, invest in some Ethereum projects or protocol, or in Ether itself, a DeFi basket, and then also place strategic capital and venture bets into companies that are helping build this infrastructure and support these communities.
Yeah, well said. Well said. I think we are my view is that we're at a point in time where the internet itself is the renaissance, the world internet, the ability, I think of the forcing functions being certainly crypto, where you can facilitate trades across the world instantaneously for very low costs with minimal government permissions. You have the COVID effect, where everyone has been effectively forced to work from home. So they're all, as many people as possible are working now from computers. Many jobs that weren't, computer friendly at all. My wife is a surgeon, and she does all of her clinics remotely. So this would be, there was no surgeons in this country doing remote first interventions. Now they're all doing it. And there's a transition period, but it still opens the door. I mean, you pick any profession, and that's true, and pick it across the world. And then I think a third trend is this globalization. So the ability for companies to work remotely across the world creates an eye-opening experience that companies who weren't remote previously for fear of, I think the top fears previously were their culture would dissolve. It was difficult to control people if they're not in the office. A second was that it's impossible to work remotely. You need to be in the same office room to have high enough throughput on information transfer and brainstorming and that kind of thing. I think there's some truth to that, but 80% of it you can accomplish remotely. And it seems like the third is that there's a huge economic driver from people who are in parts of the world that have orders of magnitude better opportunities online, even at entry-level online positions, joining Fiverr or Upwork or learning something on Khan Academy or Coursera to be a software developer or get an entry-level job. Compare that to what they would be doing alternatively in whatever country they're in. And we're blind to that in the United States in many ways because we have a very high minimum wage relative to other countries. Like our minimum wage is 5 times average GDP per capita in some other countries. So there is a tremendous economic incentive for companies in the US to hire people across the world. And as they do, people accumulate wealth, they make their own investments, they start their own companies, and then bam, we have like an entire world of creators. And that is an incredibly exciting thing for everybody, in my view.
Yeah, I feel similarly. It's, we want to build an economy that, in my view, grows the pie for everybody. And one of the most important things that we need to do in order for that to be possible is create a financial fabric for the internet that treats everybody, regardless of the circumstances of their birth, equally. And so one of the neat things about crypto is, while we still have a lot of work to do to get to this future, but it really is a shot on goal to bring billions of people into the economic influence of the internet, where they all start off on the same equal playing field from access to tooling. And so what I mean by that is, with a crypto wallet, you have exactly the same opportunity to send, receive, secure, trade, and exchange whatever you store in there as someone in Singapore or Somalia or Yugoslavia or wherever. And I think that's a really big deal. And I completely agree with your perspective on people around the world now having access to work in a way that was not foreseeable just 2 years ago. And it's going to, it's going to increase the standard of living for people all over the world. It's a big deal, and it's generally positive. There'll be other implications of it, I think, for sure. For young adults that are growing up in advanced countries, they're going to be competing on a far more global basis than they ever have before.
Yeah, that's absolutely true. That's absolutely true. Yeah. And so you need to be able to use your unique creativity and insight to work hard to offer something valuable in the world. Like, I think there's no reason why I sense this, and it's not just you, but other people have alluded to this, that there's this intuitive idea that there's a leveling off, like as one group of people in the world who have had less traditionally start to get more, then the people with more come down. But I don't believe that to be true. I believe that's what happens if you don't change the style in which you offer value to the rest of the world. But I mean, there's tremendous value in the institutions and the countries that have more wealth, right? They've accumulated more knowledge just due to the pure fact of the organizational structures that institutions like colleges, organizations like companies, like there's also this fact about the universe, which is nonlinear distribution of resources, like whether it's stars in the galaxy. Yep. Or money, it tends to consolidate and over time become pressured and the long tail is less. So I think it's kind of like, we'll see. I don't know how exactly that plays out. It doesn't seem obvious to me.
So, I don't have a crystal ball, but basically there's two things that I care about in the world. One is reinventing people's relationship with their money. And I think crypto is by far the most interesting way for us to create and shape outcomes that are more fair and at least treat everyone from an equal starting point. They're going to end up in different places based on how fast they run and how hard they work. But that's okay. We accept that there are differences based on merit. And I think that's a reasonable and just framework. But we also need to inspire more wealth creators via entrepreneurship. And this is the second thing I care a lot about in the world. And we haven't really gone over this, Mike, but I started an organization called sky'sthelimit.org. This is a digital mentoring platform that helps first-time entrepreneurs, especially from underrepresented or disadvantaged backgrounds, get access to mentors and advisors to help them think about how they can create their own business. And we've had 45,000 people sign up for this, especially in the last 2 years because of the pandemic, because job creation was basically non-existent, and small businesses were getting killed left and right because of the lockdowns. Finding alternative ways to earn income has been a huge priority for young Americans. This isn't just an American thing, though, by the way. This is a global phenomenon. So, we're very interested in the long run to make sure that first-time entrepreneurs can get good mentorship and advice and coaching, learn how to build businesses, transfer social capital from those that have it to those that need it, and ultimately support those entrepreneurs with small funding as well. And so that comes in the form of grants. We don't take any equity in these things. So anyone that's out there thinking about, if you don't know where to get going or where to start, that's a great place to go. Is you can visit skyslimit.org and get some free support. And long term, we need to inspire more entrepreneurs to take risks, and we also need those entrepreneurs to look more like the composition of our society. So we need more Black, brown, female entrepreneurs gaining experience, creating wealth in their communities, passing down the skills for how to do so. Wealth begets more wealth, grows the pie for everybody, and it has long-term beneficial impacts, raising standards of living and much more. And so, it's an absolute falsehood that big companies create most of the jobs in the world. It's not. It's small companies that create the largest amount of jobs, new jobs. And so we need to, there's an interesting moment, an opportunity right now, both across the United States and around the world, to invest more in our small business community and inspire the next generation of entrepreneurs to take up the mantle and build stuff that people find useful. And if they do that, it's a win-win.
Yeah. It seems to me that if you have a computer and you have access to the internet, you're in the game, right? So like the barrier to play is so much lower, which, I have to believe that given enough time, right? Seriously.
Yeah.
Yeah. Do you think there's anything that, because to me, I think about it like, okay, the thing that should be driving that often I think doesn't get shared enough about diversity and inclusion and these topics is that you fundamentally, from a selfish perspective, should want people, regardless of what they look like, but if they just you want everyone to be as productive as possible for your own selfish benefit. Like there's just more nice things in the world if everyone can contribute and operate at their maximum creativity and productivity. And I think that idea doesn't get shared enough. Almost like we go back to this idea before, like, well, if you have wealth, if you have money, then that means you're taking it from me, this zero-sum mentality, where it's like, no, on the internet, like if I build an amazing app, that doesn't mean another app has to die. Like there's not a finite room in the app store. That's which has been true for the physical world. Like there's only so many gazelles, there's only so much physical space. But I just, that's how I feel about it. I'm like, I just selfishly want everyone to be creative and productive so that we just live in a better place.
Look, there's a lot of there's so many big challenges in the world today, which can be met with commensurately ingenious opportunities to solve them, whether that's the climate crisis or income inequality or health tech that can improve, people's lives, mobility, all this stuff. Like there's dozens of new Einsteins out there that, because of the circumstances of their birth, they're not able to fulfill their full potential. And, one of the things, in my opinion, we have to do is build a financial system that treats everybody more fairly. And to me, crypto is not perfect, but because it does require some technical knowledge, and you need access to the internet. So there are some barriers to entry there. Those barriers to entry are radically being decreased from a cost to entry perspective. And so I'm excited about that long term. I'm sure we'll have other challenges, and the internet is going to constantly, I would say, challenge policymakers and more, but that's okay. Yeah, we can and should do better, and we should shape a society that we want to pass down to our kids that is better than the one that we inherited, and that's just that seems like a good thing for everybody.
Yeah, totally. When it comes to Blockchain.com, the organization has raised 500 million, close to 500 million range. Certainly yes. a lot of cash. Is there a is there a focus on, is there a double down of sorts internally where it's like, hey, we want to spend this money on distribution across the world, or is it more on thinking about building out deep technology layers? Like, how do you view the game that you want to win? Like, is it just mass adoption across the world for your basic products you have? And if so, if that's your mentality, I'm curious on on like what's happening now when I look at the LA Stadium, crypto.com, blockchain.com has their name on a bunch of jerseys out there. Like, is that what large crypto companies are thinking about, is like mass eye branding?
That's a good question. So, at Blockchaincom, speaking on the branding thing, it's been really encouraging to see, I would say, our contemporaries go out and spend enormous sums of money, doing brand and sports partnerships. I think you're going to see more of that. And I think that's good. It's like a rising tide raises all ships in terms of increasing awareness. There's a famous book called Crossing the Chasm, which discusses how large communities become aware of new products or features or movements. And you basically have these like super early adopters that are, kind of influential evangelists. And eventually they convince 2 more people to do something. And those 2 people convince 4, and 4 to 8. And you kind of get this buildup. At some point, you have to cross this gap between, evangelical early adopters of something to a mainstream audience. And to me, we're definitely like well over that leap and are headed into, mass adoption. It's which has kind of been the goal all along. From a company's trajectory perspective, my partners and I, we never had an interest in a getting quick and rich scheme. Like, that is not what we were here to do. There were a lot of ways to do that, and we could have retired if we had decided that was what we wanted. At blockchain.com, what we're trying to do is have a long-term time horizon for achieving, I would say, social and economic outcomes. And we think on at minimum a 10-year time horizon. But Mike, I don't see it as like we spike a football at the end of some game and it's like, oh, we've achieved like everything we set out to do. Because that's just not how it works. Like, basically, your company gets bigger, you add more muscle to it, you develop a culture, and that culture inspires more people to come participate and support your work. I'm not sure what I don't think there's an end game to it. It's just about improving it every little bit, and you just make small incremental improvements, and you look across those improvements over a duration of time, and you end up in a better place. And it's, so, when I think about what I would like to have the outcomes be, it's like, a billion plus people in the world using crypto by 2030. We'll reassess that if we get there earlier, but that's the direction of travel. I want to build a company that, regardless of how long people spend time at the firm for, they look back and go, I'm really proud of the work I did there. We made a difference. And of all the places I could have dedicated and spent my time, that's some of the proudest stuff I did. And so when I talk about, people fulfilling their potential, sometimes that's an entrepreneur. That can also be a colleague or a teammate that ships a cool project that improves a feature set, that changes the engagement rate on, something we do. So there are a lot of positive outcomes across that story arc and journey. And ultimately, it's already happened. We've had some people that, graduate, is what I say, from the company. They go on and found their own thing, and they build a company themselves, and they, go through the crucible of learning how hard it is to sometimes make, decisions and, deal with, management and leadership, and then aligning against values and principles and shipping product and building stuff that people find useful. And so at the end of the day, like, all that collection of things are, how I think about what we're trying to do, ultimately with the outcome of, helping bring crypto to the masses and building an extraordinary company that, generates huge amounts of value for everybody that came along the journey with us, and, is valuable to people that use it.
When you look at, I'm all on board with that, by the way. It's amazing. You guys are doing a great job. High five. When you look at I want to get your take on this. Like, put yourself, instead of being in blockchain.com for a second, think about this as more of an American perspective. So obviously today, we're recording March 8th. There's incredible tension now, political agitation from the war between Russia and the Ukraine. And arching that is this East versus West tension that we're all aware of. The U.S. has issued sanctions, which sanctions are blocking private companies and public companies from doing business with Russia. Those sanctions impact all U.S. companies and their ability to trade with Russia. And the SWIFT network has gotten a lot of pressure from the European Union to shut down, to not make bank transfers in and out of Russia. And I think today, as of today, they don't allow bank transfers in and out of Russia. Do you see crypto companies? Is the wise move for crypto founders? So say people are listening and they're running other companies that are significant in the crypto space. Do you see their role as being, I guess, in some ways, it's the trap. What's the trap? The trap is it's easy to think that you're right, and so the persistent questioning of our philosophy, is our philosophy right? Whether we should block transactions in Russia, like TikTok shut out of Russia. I think today YouTube and Instagram are still operational in Russia, and if you shut down operations in that country, that means those citizens of that country can't communicate with each other, and there's all sorts of externalities from that. Crypto is the same way. Like, it's not obvious to me whether banning it is a good thing or a bad thing. Do you have any philosophies of operation that you'd like to share to other people who are running crypto companies, or just mental models about how to think of this, especially as things can progress in a negative direction? Not saying they will, but if they do, it's helpful to have this mental model kind of fleshed out a little bit. I'm curious your thoughts on that.
Yeah. So, as an American director of a firm, obviously we have obligations to comply with everything our democratically elected officials determine is necessary in order to to sanction, the Russian regime and their aggression toward Ukraine right now. So caveat all that, we obviously comply with sanctions. Crypto is interesting because it's a neutral technological fabric for exchanging precious information over the internet. Centralized service providers will definitely be required to enforce sanctions against Russian entities. It's not clear from my last study of it that individuals in Russia are actually included in those sanctions yet. Certain ones are, but I mean like Russian citizens. Ultimately,
Right.
to me, defanging, oligarchs and, the oligarchs and leaders of the world that are dangerous, the easiest way to do that is to remove their ability to control money over their people. And so in the long term, I think because the principles of crypto generally lead toward a freedom of ownership over your assets, most tyrannical dictatorial nations in the world will not want to support or have crypto. And so if you look at the list of countries that have taken an aggressive posture toward crypto, almost all of them are dictatorial or tyrannical. And so in the tension between East and West, in terms of what kind of world economy and what kind of world values we want to lean into, to me, it's pretty clear. Like, we should lean into the internet, lean into freedom of speech, lean into freedom of ownership over assets and merit-based work, and export those values and encourage them. And so, over the long term, I think it's going to be really interesting to see if the battle between grip, control, and censorship, especially from dictatorial, tyrannical, oppressive regimes, how that'll compete with open source, free economies that allow for the movement of goods, services, and precious information over the internet. And I'm hopeful that we'll land on the right side of all of that. But there's an initial reaction sometimes to try and overly control or assert dominance over things that are new. And crypto is tricky because without exaggeration, it combines everything that people, and especially policymakers, don't understand about technology with everything that a lot of people really don't understand about money. And it's combined those things. And so it's like really intimidating, and you can easily see how it would trip up policymakers or regulators. They would, just try and apply one concept or something to it. And it's just not that simple.
Yeah.
So in short, because crypto is neutral, there's concerns obviously related to whether or not oligarchs could bypass sanctions with crypto. Several members of the DOJ and other members of the U.S. government have basically said this is not a concern of ours. And the reason for that's pretty simple. Because the transactions are all online and you can see everything that happens on the blockchain, they feel like they have an effective net to prevent wide-scale crypto, I would say, money laundering. But it is a legitimate concern to study. But at the same time, the United Nations, they offered Ukraine $20 million as part of a compensation package as a humanitarian effort. Within 1 week, the Ukrainian government raised over $50 million from just donations from crypto evangelists and community members globally in support of their cause. And so there's this interesting thing now, which is like this conflict between Russia and Ukraine is sort of like a conflict between the internet and an invasive force. And it's going to be pretty fascinating to see what happens over the next few weeks. But ultimately, we all hope for in the cessation to the violence and reduction in tensions, because you could see how, because we don't have fluid information and people form their own narratives based on biases, like it's easy to ratchet up, and it's pretty worrisome. So I'm hopeful that we can unwind all that, obviously.
Yeah. Well, it'll unfold the way it unfolds. I think that's wise perception. And also, Nick, for you personally, it's just, the gravity of what you're doing, I'm sure sometimes is heavy, but people who are translating difficult to understand technical and political landscapes in a way that most people can understand, it's just, your role is very important, right? Because to go from a politician making a decision, they have to understand what's going on, and that means it has to be translated through the Twitter sphere. So I think that's why I'm personally doing this show and a big believer in long form conversations, because it takes a long time to think about complex issues and articulate them in a way that people can receive and believe and be convinced of with an open-minded head and heart. So congrats on all the progress you guys have made at Blockchain. I'm sure your social media handles are easy to find. Obviously, your website is very easy to find. Anything else you want to throw out there as far as the personal social accounts or any other organizations?
In conclusion, I appreciate the conversation, Mike. I think there's often hear this, like, is it too late to get involved in crypto? I've seen that the price is very volatile. My advice is it is important to learn about these trends and what's changing in the world of money. And so, you can sign up for a Blockchain.com wallet. You can sign up for one of our contemporary competitors, and recommend testing these things out. Learn how to use them. And at the end of the day, also, if anything you've heard about was interesting today, there are more open roles in our industry than at any time. And so if you've been sitting on the sidelines, if you're someone that worked in traditional finance, you worked in payments, if you're thinking about maybe starting your own thing, there's tons of opportunities in green pastures in the crypto economy. And so, we're growing very quickly. And if you visit blockchain.com/careers, my little plug, a lot of open roles as well to join our team. So I appreciate it again, and looking forward to catching up. Maybe in the future we can revisit some of these, some of our views today.
Let's do it, man. I enjoyed it. Keep crushing, and congrats on everything. Later, Nick.
Thank you very much.